Welcome back, everyone. I hope you're doing well. And in this video, we're going to take a look at two big tech companies who have been making some major headlines as of late and may be a great buy as the big tech stocks finally see some red and are falling down from their 52-week highs. So these companies are market leaders, they dominate their respective industries, and going forward, they're projected to continue to grow at a high double-digit rate for many years in the future. And we've seen major headlines over the past few days, like the fact that Facebook is coming out with a competitor for Clubhouse, the very popular live audio platform, and the company also announced a new suite of services surrounding podcasts. So over the next few weeks, many new products regarding audio are coming out on Facebook's platform. And if we take a look at Microsoft, another big tech name, they have recently announced that their Netflix for gaming, or their digital streaming network that you can stream over 100 live video games on any mobile device, is coming out for iPhone and PC in beta later this week. This is going to be a big expansion for the company, and for a monthly subscription, you can have access to a wide variety of games without having to download them, and it could be all live streamed on any device. And going forward, this xCloud platform is expected to be the future of Microsoft's gaming services. So some big news coming out from some major tech companies over the past few days. So in this video, we're going to go over Facebook and Microsoft, take a look at their recent headlines, and determine if now is the time to pick up some shares of these big tech companies. We're also going to go over their current operations, their financials, and analyst future expected growth for each individual company. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first big tech company that we're going to focus on today is ticker FB, which of course is Facebook. The company currently trades for $302 per share, and they have a market cap at $870 billion. And the company right now sits with a forward PE of only 27.2, which is actually very reasonable for a high growth company. And we can see, according to Simply Wall Street, Facebook's actually 15% undervalued at the current share price, and the estimated fair value per share is at $358. And this is calculated through a discounted cash flow analysis where they forecast out all of Facebook's future free cash flow and then discount that number back to the current point in time. So right now, they believe Facebook is trading for a price that is 15% below the company's true fair value. And if we take a look at a Morningstar report, they have the estimated fair value per share at $317. So Facebook currently trading at the level of 302. Even according to the Morningstar report, this company is sitting below their estimated fair value per share. So now may be a great time to pick up a few shares of Facebook at this current level. And right now, if we take a look at their recent announcements, we of course have the news that they're coming out with a live audio competitor to kind of rival Clubhouse, and the company's new audio plans include having the ability to actually record your voice and post it in the newsfeed on the Facebook app, similar to a different text or picture feature that you can do right now. And for podcasts, they're also looking for a partnership with Spotify to link your different podcast likes and what you're listening to directly to the Facebook platform. So going forward, the company's coming out with new ways to interact with the audio space, which has exploded in popularity over the past few years. And another reason why I believe Facebook will continue to grow over the longer term is because this is one of the top companies in the development of artificial intelligence, and they're already using AI across all of their different platforms. And for Facebook, because of how the company's built, all their different services and suite of goods, AI will be a key driver to keeping users engaged, entertained, and coming back for more. And going forward, the company has also just announced, just last week, that they're building an AI tool to help predict effective disease-fighting drug cocktails, which I think is going to be a massive market over the next few years. I think going forward, because of this pandemic that has really killed the economy and now we're just coming out of it, I think many big companies are going to spend tens of billions, if not hundreds of billions, to come out with different tools based on artificial intelligence to help predict and prevent any future pandemics like the one we're currently going through. And government officials have expressed interest in investing in this industry over the next few years. And now if we take a look at Facebook's latest investor presentation, we can see how dominant this brand is on a global scale. And at the year end of 2020, the company had around 2.8 billion monthly active users across all of their different services. 2.8 billion. The world's population sits at over 7 billion people. So the fact that 2.8 of them are using a Facebook product every single month is absolutely incredible. And we can see that that's spread out all around the world. Asia Pacific, Europe, US and Canada, and of course the rest of the world, this company is globally diversified, and as of Q4 2020, just under 2.8 billion monthly active users. And we can see every single quarter that number continues to grow. So although some individuals believe Facebook's on a downtrend, the graph is really showing otherwise, and as more individuals all around the world get access to Facebook's products, I believe this will continue to grow. And if we take a look at their quarterly revenue, over the long term, they are trending in the right direction. And we can see that in Q4 2018, they generated over 16.9 billion of total revenue. That then grew 1 year later in Q4 2019 to over 21 billion. And then finally, from 2019 to 2020, their Q4 revenue crossed $28 billion. So we can see year over year, their quarterly revenue is surpassing the previous level. And if we take a look at their income statement on an annual basis, this company's total sales are growing at a terrific rate. Back in 2016, they had $27 billion of total revenue. And that has now grown to close to 86 billion in the trailing 12 months, which is absolutely incredible. They've more than tripled their total revenue in only a 5-year span, and that's growing at an exponential rate. And if we take a look at their net income, this company is highly profitable as well, and we can see year over year, total profits are growing once again at a very fast rate to over 29 billion in the trailing 12 months. So Facebook has a beautiful income statement with revenue and income growing year over year, but what I truly love about this company is their balance sheet. And I think they're in one of the strongest financial positions out of any company in the entire world. Right now, they have $62 billion of total cash sitting on the balance sheet and total current assets of over 75 billion. And if we compare that to their short-term debt or their current liabilities of only 15 billion, that means they have a current ratio well above 5 and are very sustainable over the shorter term. And the company has just under 160 billion of total assets, which continue to grow every single year. But what's extremely impressive is that they carry zero long-term debt on the balance sheet. Zero long-term debt. This company is highly profitable. They make so much income and cash flow that they fund their own growth and do not rely on external financing to fund the business. And we can see zero long-term debt is extremely impressive, and not many companies can say that on their balance sheet. So I love Facebook. I love this line right here. It's my favorite thing that attracts me to this company. And although they have around 15 billion of capital leases and some other non-current liabilities, that is tiny relative to the size of this company. In total, they have $62 billion of cash sitting on the balance sheet, and the company's total liabilities, current and long-term, only total 31 billion. So they have double as much money in cash that they can pay off all of the liabilities on the entire company's balance sheet and continue to operate with over 30 billion sitting in cash, which is extremely impressive. And the company's total equity has now grown to 128 billion from their latest report. And if we take a look at Facebook's cash flow statement, this company generates major cash flow every single year, and we can see their total free cash flow has grown from 15 billion all the way up to 23.6 in the trailing 12 months. So every single year, they generate more and more cash to continue to reinvest, grow the business, buy back some shares, and continue to grow their entire operations. And if we take a look at some future growth potential, the company's forecasted to grow their total top line by 25% this year, followed by another 20% growth in 2022 to around 128 billion of total revenue. And the company's total net income, or their profit, is projected to grow at 14% annually over the next 3 years. And if we take a look from where they are today, analysts are forecasting total top and bottom line expansion all the way up past 2025, where they're projected to hit close to 200 billion of annual revenue. And right now, analysts are considering this company a buy with 18 strong buys, 27 buys, 4 holds, and 2 sells, which gives the company an overall buy rating. And we can see by the year end 2022, their total revenue is projected to grow by over 49%, and the company's total share price is expected to grow by over 21% annually for the next 5 years in the future. So analysts are expecting some big growth to come from Facebook, and at this current level, they have the stock as a strong buy coming in at a 1.8, and the current share price of $302 is below the 12-month expectation of $338 per share. So definitely a company to take a look at right now for your portfolio. They have outperformed the market over the past 5 years, and analysts are projecting that trend will continue going forward in the future. And now we're going to take a look at the second big tech company in this episode, and that of course is Microsoft. Ticker MSFT. They currently trade for $258 per share, and this big tech giant has also been making some major news headlines that are expected to help the company grow over the longer term. They have a market cap at $1.97 trillion and are trading with a forward PE of 35.38 and a dividend yield of 0.86%. And similar to Facebook, this company is estimated to be undervalued at their current share price. According to Simply Wall Street, the fair value per share sits at $264, so Microsoft, currently trading for $258, is around 2.3% undervalued at this current level. So to buy one of the strongest companies in the world, right around their estimated fair value per share and in an extremely overvalued market, may be a great deal if you're looking to expand your positions in these tech companies. And we can see we're discussing this company today because Microsoft has just announced that their live gaming streaming service is expanding into iPhones and PC starting this week in a beta version. And this Xbox Cloud Gaming is the future of the company's expansion into the gaming sector, and they're not coming out with any new consoles after this latest Xbox. So online direct streaming is the future of gaming, and this platform has just come out with a service expanding into the iPhone and PC network, which is going to be massive for the company. This service runs for $15 a month, and it gives users the potential to stream over 100 live games without having to download them on their device, and it's an unlimited plan, which is very attractive to many gamers on the market. Right now, if you want to purchase a new game, it will cost you upwards of $80 to $100. But for $15 a month, you will get access to 100 titles that you don't even have to download, so there's going to be no memory issues across all of your different devices. And another major headline that I think is going to help the company expand over the long term is the fact that Microsoft has just acquired Nuance for a deal worth just under $20 billion. Nuance is a cloud and AI company focused on the healthcare sector and speech recognition. And going forward, many big tech companies are focused on audio and speech as the future growth drivers of their entire business. And like we saw with Facebook, who's expanding into the audio space, Microsoft also understands that's where the trend is going with different speech recognition products dominating the market. So I think this acquisition is really going to expand Microsoft's development of artificial intelligence and give them some key research and development tools to expand their AI and their different speech recognition beyond just the healthcare sector. And I think this was a great deal for Microsoft to acquire the company at their current point in time. And next, we're going to move on and go over the company's latest investor presentation to take a look at some of their key business segments that are expanding at a terrific rate. And if we first start off with their cloud sector and the Azure platform, which showed revenue growth over the latest quarter of 50% year over year, which is incredibly impressive. Their LinkedIn revenue was up 23%, their different Office commercial products grew 21%, and their dynamic and cloud service revenue grew 21% as well, which is incredibly impressive. And to note, with the release of their newest Xbox, that revenue grew 40% year over year, and the latest Xbox was the company's most successful launch of a console product. So I think this company has been posting some very strong results, and even though they're worth $2 trillion, their growth has no signs of slowing down. And now if we take a look at their financial statements, similar to Facebook, this company has some incredible financial results. Every single year, total revenue continues to grow, and in the trailing 12 months, they have generated $153 billion of total sales. And if we take a look at their bottom line, the company's profits over the trailing 12 months come in at $51 billion, and this company has a net profit margin of 33%, which is incredibly high. With 150 billion of total sales, and to generate 51 billion of total profits is incredibly impressive, and that just shows how dominant this company really is. And if we take a look at their balance sheet, they have over $131 billion of total cash sitting on the balance sheet. 131 billion. Not many companies are worth 131 billion. So the fact that Microsoft has that sitting around just in cash is incredibly impressive, and their total current assets come in right around $174 billion. So if we take that 174 and compare that to their short-term debt of only 67 billion, they have a nice current ratio, well above 2 and very sustainable over the shorter term, and this company has total liabilities of $173.9 billion at this current point in time. So with 175 billion of total current assets and 174 billion of total liabilities for the entire company, just their short-term assets available to them over the next 12 months is enough to pay off the entire company's debt, which is extremely impressive, and another brand with very strong financial position, and they have 130 billion of total equity sitting on the balance sheet. So one thing I want to note, although both companies, Facebook and Microsoft, are very strong financially, Facebook at this current point in time has 128 billion of equity on the balance sheet. Microsoft has 130 billion. So a slight $2 billion difference, but Microsoft is trading for 2.5 times market cap compared to Facebook. So if you're looking at equity when evaluating a company, Facebook is much more valuable in that space with just as much equity and is trading for less than half of Microsoft's current valuation. And if we take a look at their cash flow statement, another brand generating massive amounts of cash every single year, and their free cash flow over the trailing 12 months has come in at over $50 billion, which is incredibly impressive. And again, similar to Facebook, every single year, that numbers continues to grow from 31 billion all the way up to over 50 over the past 4 years. And going forward, their total revenue is projected to grow by 15% this year, followed by another 11% growth throughout 2022 to over 182 billion of total sales. And the company's bottom line, or their earnings, are projected to grow at close to 10% annually, and we can see from their current position, no signs of slowing down total revenue and earnings growth all the way past 2025, where they're expected to hit 260 billion of total revenue and over 91 billion of total net income. And at this current level, Microsoft is considered a buy, coming in with 16 strong buys, 15 buys, and 4 holds, and no one is selling out of this company at this current point in time. And by year end 2022, their total revenue is projected to grow a total of 28% to that $183 billion range. And regarding their share price, over the next 5 years, we're expecting 18% annual share price appreciation, adding that 1% growing dividend, which they've been adding to by at least 10% every single year. This company is expected to return close to 20% every single year for the next 5 years in the future. And right now, they are considered a strong buy, coming in at a 1.7, and the current share price of $258 is still slightly below the 12-month expectation of $273 per share. So Microsoft is definitely another brand to take a look at for your own portfolios. This is the second largest holding in my personal financial freedom portfolio. I own 44 shares with a market value of over $11,000, and my average cost is at $190 per share. And this is a company at this current level, I still think I may be adding more to my position. I love the brand. I think they're going to grow long term, and I don't think anything will stop Microsoft and Facebook from continuing to dominate the tech sector for long into the future. So I want to thank you for watching the video to the end. We're going to wrap it up here. Of course, in this episode, we took a look at Facebook and Microsoft, two of the strongest companies in the world. We went over their major news announcements, Facebook coming out with a Clubhouse rival, Microsoft's latest acquisition, and their cloud gaming network. And going forward, two companies definitely worth taking a look at. They're estimated both to be undervalued at this current share price and maybe worth a buy at this current level. So I want to thank you for watching to the end. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and I will see you in tomorrow's episode.